Most people wake up every day. Wake up, go to work, come home tired, pay the bills, and wonder where the money disappeared again. Year after year, nothing changes. Not because they don't work hard, but because no one ever taught them the rules of building wealth. On a $50,000 salary, it can feel like becoming a millionaire is impossible. But the truth is, it isn't your income that traps you. It's the system that trains you to stay a consumer instead of becoming an owner. From childhood, we're taught to spend a nicer phone, a newer car, another night out, another monthly payment. The world wants you distracted, comfortable, and stuck. But there comes a moment in life when something inside you wakes up and says, enough. I want out of this cycle. And that moment changes everything. If you earn $50,000 a year, you can still build real wealth. You can still build a portfolio that quietly grows into 7 figures. You don't need luck. You don't need a higher income. What you need is a blueprint and the discipline to follow it. Charlie Munger knew this better than anyone. He didn't get rich by chasing trends. He got rich by following a few simple principles, patiently, for a very long time. The first principle is this: think long term. Most people think in days and months. Wealthy people think in years and decades. When you think short term, you chase. When you think long term, you compound. And compounding is where the real magic happens. Second, own assets, not upgrades. Every dollar is a choice. You can buy something that fades, or something that grows. Wealth is built by ownership, not consumption. Third, be boring. The world loves flashy hype, day trading, meme stocks, get-rich-quick fantasies. But the boring path is the profitable path. Slow, steady, patient investing is how ordinary people build extraordinary wealth. Fourth, avoid stupidity before chasing brilliance. Most people don't lose because they're not smart. They lose because they can't avoid mistakes. If you avoid the dumb stuff, the smart results take care of themselves. And finally, be patient. Compounding needs time. Most people never get rich because they never wait long enough. They interrupt their own growth over and over again. But you won't, because starting now, you are done thinking like a consumer. You're done being controlled by impulse, noise, trends, and fear. You're building something real, something that pays you while you sleep, something that grows while you live your life. A millionaire portfolio on a $50,000 income is not a fantasy. It's a formula. And now that your mindset has shifted, we can begin building it step by step. The journey begins now. Before you can build wealth, you must stop the leaks that destroy it. Most people don't fail because they don't earn enough. They fail because their money isn't directed and disciplined and undocumented. If you don't control your cash flow, someone else will control it for you. Starting today, every dollar you earn must have a job. No more guessing. No more I think I spent less this month. From now on, clarity is your weapon. On a $50,000 salary, your mission is simple. Live below your means, so you can invest beyond your limits. You don't need extreme sacrifice. You just need intentional spending. You cut the waste, not the joy. Wealth doesn't start with investing. Wealth starts with margin money that's left over. And that margin will become your seed. That seed will become your portfolio. And that portfolio will become your freedom. Now that the leaks are closing, it's time to build your foundation. Charlie Munger believed that ordinary people don't need complexity to get rich. They need simplicity, consistency, and patience. That's why we're building your portfolio the Munger way, slow, steady, and unstoppable. You will invest automatically, every month, into broad low-cost index funds. No stock picking, no gambling, no chasing hype. You will own the market itself. With every paycheck, you will buy small pieces of the greatest businesses in America through the S&P 500. and then you will wait. The money you invest will become your silent employee working day and night, growing quietly in the background. Your portfolio won't shout. It won't entertain you. It won't give you dopamine, but it will compound. And compounding is louder than any trend, any headline, or any shortcut the world tries to sell you. Other people will panic. Other people will chase the next hot thing. Other people will spend their raises instead of investing their raises. But not you. You are done living as a consumer. You are now an owner. And every month, with every contribution, you buy your time back. You buy your future back. You buy your freedom back. This is how millionaires are built on ordinary incomes. Not by reacting, not by rushing, but by following a simple plan for a very long time. You won't feel the difference at first, but one day you will look at your portfolio and realize it's no longer small, it's no longer fragile, it's working harder than you ever have, and it never sleeps. This is the path. This is the blueprint. And the next step is where the math becomes real, and the results become visible. Now that your foundation is set, it's time to create your step-by-step millionaire plan. The journey continues. A millionaire portfolio isn't built in a single year. It's built through quiet, repeatable habits. And the most powerful habit of all is automatic investing. When your investing happens without emotion, without hesitation, and without negotiation, you remove the biggest enemy of wealth, yourself. Your plan is simple. Every month, as soon as your paycheck hits, you invest before you spend. Not after. Not if something is left. Wealth is built by paying yourself first. 10% is good. 15% is better. 20% changes your life. Whatever the percentage is, commit to it. Make it automatic. Make it non-negotiable. Money that never hits your checking account can never be wasted. Once invested, your dollars go straight into a broad low-cost index fund that tracks America's greatest companies. You're not betting on one business. You're owning hundreds of them, quietly, patiently, unemotionally, month after month, year after year. You're planting seeds relentlessly, knowing most people never plant anything at all. There will be days when the market rises and everyone celebrates. There will be days when it falls and everyone panics. But you will not react, because you are not a gambler, not a speculator, not a follower of noise. You are a builder. You understand that the market rewards discipline, not drama. And as the rest of the world chases shortcuts, you will collect shares. More shares when prices are high. Even more shares when prices are low. Because every dip is a discount to the long-term investor. In the beginning, your portfolio will grow slowly. You'll invest, and it will feel like nothing is happening. But that's how compounding works. It whispers before it roars. 5 years from now, the numbers will finally begin to matter. 10 years from now, momentum will take over. 20 years from now, you'll realize the portfolio has become bigger than your contributions. That is the moment compounding takes control. That is when the wealth curve bends upward. Most people never reach that moment because they stop. They sell, they switch, they chase, but you will not. You stay the course. You stick to the plan, because the plan is working even when you can't see it. Especially when you can't see it. With every passing year, your net worth will rise. Not because of luck, not because of genius, but because you followed a rational plan with a rational consistency. This is how ordinary incomes become extraordinary fortunes. Now that your structure is set and your system is automatic, it's time to shift gears. Wealth is not only built by investing money. Wealth is built by upgrading your mind. In the next phase of your journey, you will learn the habits, the disciplines, and the filters that protect your future, so you never sabotage what you are building. Wealth isn't only about what you earn or what you invest. Wealth is also protected by what you refuse to do. Most people lose more from bad decisions than they gain from good ones. That's why your next evolution as an investor is discipline. Discipline with your time, your attention, and your temptations. There will be moments when impatience whispers in your ear. Moments when fear tells you to sell. Moments when greed tells you to gamble. And moments when envy makes you question your own path. Ignore them all. The world is full of noise designed to pull you away from your plan. But the path to wealth is quiet. Stay on it. The market rewards those who wait. It punishes those who react. As your portfolio grows, people around you will notice your calm. They'll wonder why you're not panicking when others panic. They'll wonder why you never chase trends. They'll wonder how you stay so steady. The answer is simple. You have rules. You follow principles. And principles do not shake when the wind blows. From now on, your lifestyle must reflect your direction. As your income rises, avoid lifestyle creep. Most people earn more and spend more and end up right where they started. But you will earn more and invest more, and your gap will widen. That gap is financial power. That gap is what turns a worker into an owner. That gap is what compounds. Sacrifice is temporary. Freedom is permanent. Every dollar you invest is a vote for your future. Every unnecessary expense is a vote for your past. Choose wisely. Your habits are writing your destiny. Whether you notice or not, stay focused. Stay patient. Stay boring. And protect your wealth by protecting your mind. The moment you master your emotions, you become unstoppable. Because the only real enemy on this journey is you from yesterday. Now that your mindset is unshakable and your system is automatic, it's time to zoom out and look at the long game. What happens after 5 years, 10 years, 20? How does this journey end? The final phase is about legacy. It's about wealth that outlives you. Wealth that supports your life instead of consuming it. Wealth that gives you options, time, and peace. The journey continues. Sooner or later, every investor reaches a crossroads. You will look at your portfolio, your habits, your life, and realize something powerful. You didn't just build wealth. You built a new identity. You are no longer the person who lived paycheck to paycheck. You are no longer the person who reacted, chased, or feared the future. You became someone different, someone disciplined, someone patient, someone free. The world will keep spinning in chaos. There will be crashes, headlines, drama, predictions, and noise. But you will stay calm, because you finally understand the truth. Wealth is not built in moments of excitement. Wealth is built in years of consistency. You didn't win because of one lucky decision. You won because you made the same intelligent decision over and over again. There will come a day when your investments earn more in a year than you used to save. A day when your money works harder than you. A day when you check your portfolio and smile, not because of the number itself, but because of the journey that built it. You will realize you didn't just create financial freedom. You created options. The option to work because you want to, not because you must. The option to take your time back. The option to design your life on your terms. And when that day comes, remember this: it all started with small choices. A few dollars invested, a few temptations resisted, a few principles repeated. Nothing magical, nothing extreme, just patience, discipline, and belief. That is the blueprint. That is the legacy of Munger's wisdom. Slow, quiet, unstoppable growth. So continue. Even when it feels slow, even when no one notices, even when you doubt yourself. Your future self is waiting. Your freedom is waiting. Your wealthy life is already being built. One automatic investment at a time. Stay patient. Stay consistent. Stay invested. Because a millionaire is not something you wish for. A millionaire is something you build. And you're building it right now. Your journey doesn't end here. It starts here I once believed the only way out was a bigger paycheck, a lucky break, or an inheritance I'd never get. I thought the path to real money required something dramatic, a startup, a viral moment, a windfall. Then I learned something simpler, and it changed everything. If you make $50,000 a year and you're listening right now, listen carefully. Your salary is not your ceiling. It's your starting line. The rest is a game of decisions, dozens, then hundreds. Then thousands of small choices stacked over years until one day the numbers no longer look small. Picture a life where you wake up and freedom is not a rumor. Picture mornings without alarm clocks, where work is optional, where your time is yours. That life is not reserved for the lucky. It is built by people who learn one brutal truth. Wealth is created by ownership and protected by habit. Charlie Munger called it the long, patient line, and he lived like someone who loved being last in the race, because being last usually meant you'd kept your head and your capital intact today. I'll tell you the exact plan, the blueprint, that turns an ordinary income into an extraordinary outcome. Not in a year, not in a gamble, but through boring, relentless, automatic moves that make the rest of your life possible. This is a script for people who are tired of living for never, tired of someday. Fast, loud voices will tell you to chase trends. I'll ask you to mute them. Fast, energetic, crowd-sourced hysteria sells well. Patient capital wins quietly. First, understand the math that everyone pretends to misunderstand. If you invest a small percentage of your paycheck consistently and you let compound interest do its work, the results are exponential. The secret is not cleverness, it's time. The market is a machine that pays the disciplined. Every month you buy shares, you own a sliver of real businesses, companies selling things people need, companies improving their services, companies generating cash flows that keep getting reinvested. You don't need to find the one lucky stock. You need to own a broad slice of America. That is how fortunes grow without drama. So here's the commitment I want from you. Automate your investing. Pay yourself first. As soon as the paycheck clears, move a fixed amount into low-cost index funds. 10% is a solid start. 15% changes trajectory. 20% transforms your life. Decide the percentage, set it and forget it. The first years will feel like you're giving away money. Later, it will feel like you bought back your time. You'll hear people say, "But I can't afford to save." And sometimes that's true. But more often, it's a problem of priorities, not income. Money leaks are stealthy. A few subscriptions here, meals out there, impulse buys piled like pebbles until they become a wall. To turn 50,000 into a millionaire, you don't need to suffer. You need margin. Margin comes from being a little more intentional today so you can be wildly free tomorrow. Intentionality looks like this. Set a budget that reflects your values. Cut recurring charges that don't bring sustained joy. Reduce the expenses that only exist to signal status. You will be surprised how quickly the small cuts add up. But the real multiplier is when you take your raises and bonuses and automatically increase your investment rate. When your income rises, you shouldn't inflate your lifestyle in lockstep. Instead, keep living the same, or close to it, and let the extra money accelerate your portfolio. That's how wealthy people get wealthy. They convert raises into capital, not consumption. Now, let's talk about fear. Fear is the enemy of progress and the friend of regret. The market will fall. It's not a question of if, but when. The headlines will scream. Your neighbor will panic and sell. Your cousin will post about supposed doom and demand you do something about it. That's the moment you smile inwardly, because downturns are discounts for the person who waits. When the price of owning a piece of America drops, you can buy more of it with the same dollars. That's how the wealthy get wealthier during chaos. They treat fear like an invitation. You don't need to be heroic. You need to be consistent. That consistency is built by tiny, repeatable systems. Set up automatic transfers to your brokerage and retirement accounts. Invest in broad market index funds with minuscule fees because fees are theft in slow motion. Vanguard, Fidelity, or similar custodians offer funds that track the entire market. The safest, simplest route for people who want to win without gambling. Indexing is not exciting, but it's effective. It's the modern embodiment of Munger's affection for rational, simple solutions. There will be whispers that this boring strategy is passive. That is true and glorious. Passive does not mean lazy. Passive means you have set the terms of your financial life and you aren't letting every headline pull you into emotional decisions. You will check your accounts less. You will think longer. You will sleep better. This is the opposite of the trader's life, which is noise, constant decisions, and oftentimes worse results. Compound interest works in mysterious ways. The early contributions are the seeds. The middle years are where things start moving. The later years are where compounding becomes a force that outpaces your contributions. That curve is unforgiving on interruptions. When you withdraw or stop investing, you rest future growth. So the second vow you must take is, do not interrupt the compounding unless you have a truly catastrophic emergency. Small interruptions become big losses because they remove time from your money's most vital ingredient, longevity. Now let's be strategic. With $50,000 a year, you probably have access to a workplace retirement plan like a 401k, and likely you can open an IRA. Maximize any employer match immediately. That's free money, an instant return on your contribution. If your employer matches, contribute at least enough to capture the full match before you do anything else. After that, funnel money into low-cost index funds across tax-advantaged accounts first. Then taxable brokerage accounts as you build more margin. Tax efficiency matters because it improves effective returns over time. Use Roth accounts if you prefer tax-free growth and you think your tax rate in retirement will be similar or higher. Use traditional accounts if you want current tax deferral. Either route beats leaving money sitting idle. The exact tax vehicle is less important than the discipline of contributing consistently. Munger loved simplicity, but he also respected the math. Tax-advantaged accounts are a structural advantage you should exploit. Mentally, detach yourself from daily market noise. Investors obsess over quarterly reports and pundit predictions as if those short-term fluctuations are strategy. They are not. What matters is ownership of productive assets. A company's share price is not its value. It's a market estimate that moves like weather. Rain is not the same as climate. You are here for the climate of long-term economic growth, not the daily storms. As you build the habit, make it resilient. Automate increases. Put a rule that each time you get a raise, at least half of it flows to investments. Create a cooling-off period for all non-essential spending of more than a certain amount. Wait 72 hours before big purchases. You will be amazed at how many impulses evaporate when you add a pause. Also, protect yourself by attacking high-interest debt first. A credit card with 20% interest is a compounding monster that works against you. Paying down such debt is the highest return investment you can make because you're eliminating guaranteed, high-rate obligations. Once high-interest debt is eradicated, the path to compound growth becomes clear. If you have student loans or other low-rate debts, understand their structure. Sometimes it makes sense to keep them and focus on investing. But rarely does it make sense to carry high-rate consumer debt while also trying to build long-term wealth. Let's be honest about risk. Risk is not volatility. Risk is permanent loss of capital or the inability to meet your goals. Diversification into broad market funds reduces company-specific risk. Time reduces volatility risk. You will experience volatility, and it will be uncomfortable. But discomfort is not the same as danger unless it tempts you into selling. The person who panics at a market dip does not get to benefit from the rebound. Discipline equals optionality. When the market recovers, as it always has in the long term, you will own a larger position at a lower average cost if you invested through the dip. There will be moments of temptation. High conviction friends pushing a stock. Flashy news about cryptocurrencies, promises of quick riches. Say no. Your portfolio's job is to fund your life on your terms, not to feed your ego. Keep your strategy simple and your philosophy stubborn. Munger's genius wasn't in picking obscure winners. It was in cultivating rationality, curiosity, and the courage to be boring. Emulate that courage. This journey also requires education, but not endless education. Read the right books, biographies of successful investors, clear essays about compounding, and simple explanations of market behavior. Avoid the avalanche of daily takeaways and hot tips. Measure progress by behaviors, not by short-term balance. Are you contributing consistently? Are you increasing your savings rate when you earn more? Are you protecting yourself from stupid mistakes like panic selling or fee chasing? Those are the metrics of real progress. On the practical front, choose funds with minimal expense ratios. Fees compound like a tax on returns over decades. A fund charging 0.05% will leave you far more in retirement than a fund charging 1%. All else equal, attention to fees is a quiet form of intelligence. It is not glamorous, but it is effective. Similarly, minimize turnover and trading, because every trade has friction. Commissions less common now. Bid-ask spreads and tax consequences. Your best trades are the ones where you don't trade. There's also a psychological architecture to winning. Create rituals that reinforce the investor identity. Every month, when you automate a transfer, say aloud, "I'm buying my future." It sounds small and silly, but psychology matters. Our choices are driven by self-image. Act like a person who saves, chooses investments wisely, and resists impulse. Over time, your actions will become habits, and habits will become your character. As your portfolio grows, think of money as a tool for freedom, not as a scoreboard. The goal is to build optionality, the ability to choose your work, to pause, to take care of family, to spend time on things that matter. Plan for a life's milestones without derailing your compounding engine. Save for big purchases in parallel vehicles when appropriate, but avoid financing lifestyle through debt. The wealthy are often wealthy precisely because they avoid financing their status. You will meet resistance from people who can't imagine the discipline. Friends will ask why you're skipping dinners or not buying a new gadget. Smile and tell them you are delaying small pleasures for something larger. The truth is, the mental peace of financial progress is more satisfying than the temporary thrill of consumption. Once you taste that peace, the noise fades. There will be numbers you must face. Do the math. If you can save and invest 15% of your income and earn a reasonable long-term return, historically the broad market has returned about 7 to 10% annually after inflation. You'll be surprised how quickly compounding accelerates. Visualize the endgame. A portfolio large enough that returns cover your lifestyle. That visualization becomes a North Star on hard days. Finally, plan for legacy. Wealth is more meaningful when it supports relationships and purpose. Consider how your resources can create security for those you love or fund work that matters. But don't wait to live meaningfully. The purpose isn't only future consumption. It's building a life with intention today, financed by a future you are creating with disciplined choices now. This path is not easy, but it is straightforward. It asks for constancy, not heroics. It rewards the patient and the persistent. It honors the habit maker. The market will be noisy. Your friends will be skeptical. Your doubts will return. But if you stay consistent, you will win. You will wake up one morning and realize the machine you built is paying you back. When that moment comes, You won't remember the small sacrifices with regret. You'll remember the decision to show up, month after month, and the quiet pride that comes from owning your life. Start now. Automate. Invest in broad market index funds. Avoid fees and debt. Increase your rate when you can. Protect your mind from noise. Be boring and relentless. In 20 years, hundreds of small monthly contributions will have become a fortress of freedom. That fortress begins with a single automated transfer from your paycheck to your portfolio. Make it today.